So, I welcome all the participants and our eminent speakers at today's session, which is around the new emerging funding options for MSMEs by way of cash flow financing and voice discounting. Today, we have with us Dr. H.P. Kumar. He is the former CMD of National Small Industries Corporation, NSIC, and he's also associated with Power 2 SME as Director External Affairs. We have with us Ms. Ruchi Agarwal, who is the business head at RXIL, and very renowned Dr. Rajendra Sinha, who is the founder of MSME Advisors. So before I hand over the session to Dr. Kumar to take the discussions forward, let me walk you through very briefly the profile of the organizer, that is Power to SME. Power to SME, we established in year 2012 by our founder and CEO, Mr. R. Narayan. Mr. Narayan is also the current president of FICCI CMSME, which is the MSME body within FICCI. He came up with a very innovative business model which eliminated the intermediaries in the supply chain of commonly used raw materials from the big manufacturers to the small MSME manufacturers. And he did that on a demand aggregation model, and thus we were able to provide better pricing to our MSME clients. Over the last 10 years of our existence, we have established a holistic ecosystem to cater the manufacturing MSMEs. We have our parent brand, Power to SME. It deals in raw material sourcing and procurement solutions. We have our brand SME Shops, which is the B2B portal for maintenance, repair, and operations, industrial consumables for MSMEs and blue chip companies. We have our in-house NBFC by the brand name of BizFunds, which offer very innovative solutions in purchase financing. And we have our brand FinanceMe, which connects MSMEs with the empaneled financial institutions for the seamless approval of working capital loans. Then the key product categories that we deal in include steel, polymer, paints, yarn, chemicals, and there are several others. The major industrial segments that we cater to include auto components, plastics, textile, electronics, and many more. Uh, these are few of the competencies that Power to SME offer to its clients. We are the one-stop solution for all the requirements of a manufacturing SME, right from their raw material procurement needs to raw material purchase financing solutions to e-commerce linkages. We are the one-stop shop for all these solutions. We are an invested company. Some of the most reputed venture funds in the country have invested in us. Inventors, Kalari, Excel. Nandan Nilekani is one of our strategic investors. We are also funded by World Bank through its financial arm, International Finance Corporation. These are the few awards and accolades that we have won since our inception. And this is where you can find us. Any one of you wanted to know more about our service can get in touch through any of these mediums. So before I request Dr. Kumar to take over the session, if any of the participants has any query to be asked to the speakers, kindly submit these questions in the chat box so that we can take it up to Dr. Kumar in the Q&A session. So with these words, I will now request Dr. Kumar to take over the session. Over to you, sir.
Thank you, Mr. Zubair. Thank you very much. In fact, my greetings to all the participants as well as our distinguished panelist speakers who are experts in their fields. The issue that we are going to discuss is very interesting for the MSME sector. The credit. Credit basically has been an issue which has been discussed time and again since ages. The problem of inadequate, non-availability of adequate credit, timely credit, cost-effective credit has been an issue which has been deliberated at all levels and continues to be deliberated even today. There is a clear shortfall of about 25 lakh crore in the demand and supply of credit in India. While we are thinking of becoming we are planning to become $5 trillion economy. And we know that MSME sector has a very big role to play as it is already contributing almost 30% of the total GDP with 45% to the manufacturing sector. We are, taking all initiatives at the government level to see that the credit flow to the MSME sector rises and improves. But on the ground, what we see is that there is a very trickle down effect, very small effect of these guidelines and policies. While the government is very upbeat, but the implementation at the banking level, at the finance, dispensation is quite slow. And this credit gap of 25 lakh crore I have been seeing for the last many years. While the credit flow is improving in terms of total credit amount, but then demand is growing more than what the credit dispensation is being done. So what are the reasons? In fact, one of the reasons that we can see, the business models that the banks and finance companies, NBFCs are implementing. Traditionally, in fact, the financing or the credit flow has been in the form of asset-based financing, where the banks are used to financing cash credit, overdraft, and working capital credit for financing the cost of credit, cost of assets, cost of working capital, to acquire working capital, stocks, receivables, book dates, consumables, stores. So all these assets which are of course current assets and part of working capital, are financed based on their security value. Term lending, of course, has been one of the important issue, vertical of finance by the banking sector. And term loan is also again for the acquisition of fixed assets, plant and machinery, and other, like landed properties and other things. The scenario over the past maybe decade has been changing with the influx with the coming up of fintech companies and new age private sector banks, as well as new NBFCs which have come up. They have devised new business models. And these business models have realized the problems associated with the traditional kind of funding, which is asset-based financing, which have their limitations. Limitations in terms of assessment, limitations in terms of security value, limitations in terms of procedures and documentation, the credit worthiness of the companies, applicants, borrowers. All these things become important in terms of asset-based financing, or say financing based on the assets or for acquisition of working capital and assets. Now, the new age financing involves, in fact, not the financing of assets or cost of production, but financing of revenues, the other side of the income and expenditure account. One side is expenditure or the cost, the upper side is revenue. Now, revenue has not been financed in the traditional models, but now the revenues are being taken as the basis of financing. That is how we have come up with the cash flow based financing. Now, cash flow based financing basically involves future cash flows, that is the revenues, income of the applicant borrower. Now, in this, we or the financing institutions, banks or small NBFCs or maybe other microfinance institutions, those who are the financing agencies, look at the future cash flows of the applicant borrower and assess the requirement as to how much can we finance. This becomes very easy as it doesn't involve, in fact, the burden of assessing the working capital, or for that matter, taking securities of assets which are being financed by way of working capital. Or easier in terms of assessing what is your tax returns that you have filed, whether it is income tax or GST. GST gives you a clear, simple, method of assessing how much has been your past turnover or sales, and based on that, looking at the growth prospects, how much are you going to generate the future cash. So it's very easy to understand the requirement. requirement for meeting the current expenditure, requirement for meeting your growth requirements. So that is cash flow financing, and I feel that this is futuristic and very easy to understand, very easy to implement, very easy to operate. No need for periodical monitoring of the past operations, statements, stock statements, receivables, old dues. All these things are not required. Cash flow based financing basically requires you to tell us as to how much is your cash flow. Month to month, the requirement can be adjusted, and it can be seasonal also. It is not necessarily that you should have a cash flow spread across the year. Maybe your cash flow is seasonal, so the financing can be linked according to the timing of that cash flow. That is one thing. Second issue that we are going to discuss now on this, we have an expert with us, with Dr. Rajendra Kumar Sinha, who is going to discuss on basically this cash flow financing. Now, there is another instrument which has been introduced over the last decade. I would say almost a decade, maybe less than a decade. That is invoice financing, invoice discounting. Now, invoice discounting has been happening earlier also, but in traditional invoice discounting, it was more in the form of bill financing, bills discounting. Bills discounting required, in fact, several other things also, like a bill of exchange, invoice, and other documents. It could be documentary bill of exchange or maybe clean bill of exchange, depending upon the nature of transaction. But invoice discounting with the introduction of TReDS platform has, and of course, introduction of the factoring law by the Government of India. Now, these factoring law and the introduction of TReDS by RBI, setting up of TReDS platforms, has made this invoice discounting much simpler and easier, and a new kind of a instrument for meeting the credit requirements of the MSMEs, particularly MSMEs. The TReDS is meant for MSMEs specifically. Now, what are the advantages of TReDS and what are the limitations of TReDS? We will discuss. Of course, we have an expert on this, Ms. Ruchi Agarwal, who is the business head of RXIL. RXIL is a joint venture between SIDBI and National Stock Exchange of India, if I correctly understand. I think Ms. Ruchi will inform about the RXIL and as to what is RXIL doing and what are the benefits of this invoice discounting through the TReDS platform. But as I have understood, TReDS is a very useful initiative of the Reserve Bank of India. It's only, as of now, only 3 TReDS platforms are in operation. RXIL is one of the prominent one out of them. And the benefit of discounting through TReDS is that the vendor or the seller, which is MSME, doesn't have to bother about the realization of the bill at the end stage, at the buyer stage. So once you have discounted the bill invoice on the TReDS platform, the seller is free of the liability. It's not a contingent liability as it used to happen in the bill discounting. It is an off balance sheet for him. You have to take it off. You have sold it, in fact, to the discounting part. That is what I understand. I think Ruchi ji will be able to further explain as to how this liability, as I understand, it's without recourse financing. So without recourse financing means you don't have any recourse against the seller. That is the MSME. So MSME is free of any liability once they have discounted the bill. But there are certain problems also which we have seen in the operation of this TReDS platform. What is that problem? I'll just briefly mention. Otherwise, Ruchi ji will be able to more, throw more light on this operation. The problem is that your buyers, MSMEs buyers, are reluctant to come on the platform because they know the entire liability of payment of the bill falls on their head. So how do we bring those corporates and public sector companies, most of the buyers who are dealing with the MSMEs, registered on the TReDS platform? Because they feel little, hesitation. So while the government has made it compulsory, they announced, of course, not by a legal provision, but just an administrative announcement that all those corporates with 500 crore turnover must register on TReDS platform to provide benefit to the MSMEs. But then not all have registered, as I understand. And moreover, not even public sector companies, all public sector companies have registered on the TREDS because they are also big buyers of the MSME products. So first thing is that the public sector companies get registered. So they have not yet registered. So we have been asking the government as to at least you advise the public sector companies, they should register. And then of course, insist on your announcement that corporates with 500 crore turnover should register. On the other hand, we have requested the government, I sent a letter to the government that you make this 500 crore also to 250 crore because your MSMEs are covered under 250 crore. Beyond 250 crore turnover, all are large. So when you say large are the buyers, MSMEs are the sellers. So turnover threshold should be 250 crore, not 500. But anyway, that is of course in the discussion stage. I will stop here. In fact, I have set the context of our discussion. We would like to know, in fact, from our expert speakers as to what are these two instruments, that is cash flow financing and invoice discounting. How do they benefit the MSMEs in terms of better delivery of credit, maybe faster delivery, maybe cost effective, maybe with less paperwork, and how MSMEs can take advantage, where do they go, how do they start, where do they register, and how they can take the advantage to reduce the credit gap, which I mentioned to be in the beginning. So to begin with, I will bring my first panelist expert speaker, Dr. Rajendra Kumar Sinha, who is the founder of MSMEadvisor.com. He is basically 30 plus years of extensive experience with State Bank Group, and he has been handling top level assignments in SME and industry studies. He holds a PhD in business administration and of course a host of other qualifications like PGDM, international management, CAIIB, CIF, AMFI, and independent directors data bank certification. So a lot of qualifications. He is very highly qualified, of course, in the banking and finance sector with lots of experience. He's written a lot of articles also. I think I was reading his profile. He's a very academic oriented person. So naturally very, he understands what is the gap in terms of non-availability of the adequate credit, which we have been talking for ages. So I'll hand over to Dr. Rajendra Kumar Sinha, and I will request him to, brief the audience about both the issues, of course, but mainly about cash flow financing and what are the benefits. Over to you, Dr. Sinha.
Yeah, good evening, Dr. Kumar, Madam Ruchi Agrawal, and the learned audience. Welcome to this quite interesting session, which is very much relevant for MSME sector. Now, my brief initial inputs will cover on the challenges, few I would like to mention in brief, and the current status, although Dr. Kumar mentioned, and then highlighting cash flow and its importance, significance. Latest for bringing
आपका वीडियो ऑडियो डिस्कनेक्ट डिस्टर्ब कर रहा है.
Am I audible?
You are audible. There is little interruption in between. You can put off. Maybe you can put off your video so that the it is stopped again. We can't hear and anything. आप वीडियो बंद कर दें अगर अपना. Dr. Sinha.
Sir, he is rejoining, I think.
Okay. Yes. आप म्यूट पे हैं, Dr. Sinha. हाँ, ठीक.
There was some challenge in between.
Yeah. Please carry on. We were not able to see you or hear you. You can restart again. Yeah.
Okay. So welcome, And my brief inputs will be on the challenges aspect, which is relevant in context of cash flow financing and status, which although Dr. Kumar mentioned. Then recent initiatives of RBI bringing the expert committee on cash flow lending, and subsequently what developments have taken place. And before that also, what the importance is cash flow statement, cash flow financing itself. Now, yes, of the statistics which we have, 63.3 billion MSMEs, then about 10% of them are with the formal lending platform. And the report of which Dr. Kumar was mentioning, IFC, wherein it's talked about 26 lakh crores of deficit for the formal platform bringing of MSMEs. Then UK Sinha Expert Committee in June 2019, which gave its very detailed 140-page comprehensive report. So there also they said that the formal lending is about 14.5 trillion rupees, 14.5 lakh crore rupees. So again,
We are not able to hear you, Dr. Sinha. It is disconnected probably again. Dr. Sinha, can we switch to Ms. Ruchi Agarwal until you set right the connection? Yeah, I think we should do that. Maybe he will be rejoining. Ms. Ruchi Agarwal, are you with us?
Yeah, I'm there. So
Okay.
should we wait for Mr. Sinha, or should I?
No, I think we can wait for maybe another 10-15 seconds. Otherwise, our people are waiting. So I don't know how much time he's going to take in rejoining. Maybe he has, he has come back.
Yeah. So maybe we can check with him.
Yeah, he has come back.
Your
again.
mic is on mute.
yeah,
Yeah, please come.
yes, somehow, yeah, I'm sorry that this internet, I am trying with two internet connections. If one is giving problem, but still, yeah.
Dr. Sinha, I would suggest you switch off your video and only put on the audio. That will help your connection to get stabilized.
Maybe. So why this state of affairs has been there, that there is such a large gap for bringing on the formal platform. Now, it has come out very, highlighted that yes, the reason is that the risk is significant for these MSME, especially the smallest one. I will put it micro enterprises, and the small enterprises, the lower amongst them, because of various reasons. And then the expense for the banks to bring them on this formal platform, the cost is relatively high compared to, say, the other large industries. And then the lack of, lenders, especially in say, the tier 3, tier 4, tier 5 centers, less than 1 lakh populations. So these have been the regions primarily which have come into focus. Apart from that, the MSME level challenges itself are there. Now, cash flow lending, which even before this committee came, the private sector banks had started looking that the collateral-based lending does not serve the purpose for the repayment aspects and getting the money paid over. But now This has come under focus by and large, or I will say all scheduled commercial banks as such. And the banks, as a lender, they ask for 3 statements from the borrowers. One is income statement, the other is balance sheet, and third is cash flow statement. Now, Company Act 1956, it was not, it didn't include the cash flow statement itself. Now, Company Act 2013 brought this into consideration. And this has become an important tool for understanding the inflow of cash, outflow, and how the repayment the MSMEs will be doing for the amount lent by the banks, financial institutions. So in my understanding, cash flow based lending is going to play a very important role, and it will disrupt the MSME sector if it is executed in a very structured way, in a very comprehensive way. Now, little bit talking about cash flow aspects, that yes, it is basically the change of the position of cash and cash equivalents during a particular period. Now, cash, when we talk, it is cash on hand, deposits with the banks. I will not go into the academic side, but yes, just a little bit mentioning here. And cash equivalents, short-term and highly liquid instruments. Now, my focus is that 2019, this UK Sinha committee, it is deliberating on cash flow based lending in a very granular aspect, and has put also the structure how it should be implemented going way forward. Now what it focuses especially that the bank should develop customized products for this cash flow lending. And then secondly, they should develop ability to capture cash flow of MSME borrowers on a regular basis. And in this regard, they should enter into tie-ups with industry majors, aggregators, online platforms, so that this NBFC fintech, what it has become a buzzword now, there should be a synergy with banks, financial institutions, and these NBFC fintechs. Now, the cash flow lending, giving a briefing that yes, we have this NAI committee guidelines that whatever is the turnover for small enterprises, 25% of that is the requirement, funding requirement, and 20% the bank should lend, and 5% should be the margin. Now, that's all right. That has been going well for some time. But what is more important is the cash flow aspect capturing. So now the GST data, that is one source for capturing it. And for companies like logistic companies, the invoice-based lending, the banks are encouraging, looking at. Then e-commerce, say the sellers to the e-commerce platforms. So online portal, yes, the capturing of the payments is done. Even the POS machine data capturing, the banks are looking aspect for ascertaining the requirement for the MSMEs. As far as supply chain financing, that has been there in practice for dealer financing and vendor financing for quite some time with the banks. But yes, for the startups, for the micro enterprises, this is a challenging area which has to be addressed. And for that, UK Sinha expert committee has put forward a financial architecture for MSME cash flow lending. What it says that for all MSMEs, there should be a unique identifier code. And now, if one wants to go for opening an account with the bank for MSMEs, the banks are asking what is the PAN of it. Earlier for account opening, they were not asking, but I appreciate that because in the time to come, this PAN of the MSMEs is going to be linked with the various points. And from this, when it is taken to the various portals, just like for example, Ministry of Corporate Affairs for all the corporates, all the data is available there. So the cross-check can be there. The lender is comfortable in having a cross-check done over there. Similarly, if a unique enterprise ID is there for MSMEs and it is tagged to various points, so all the financial information can be captured by the lenders, and that will provide a lot of comfort, and it will be saving time also. So the financial information means ownership structure, complete financials, even auditors' comments wherever the audit is done over. Then the non-financial information also can be captured, like registration details, sorry, management details, the related entity of the proprietor or the partners, as the case may be. Then the various status of compliances like TDS, GST, export-import regulation related compliances. So all this possibly will be captured, and the lender will have these inputs available for the entity which is seeking finance. So this is what is proposed, and the way forward, although it's easier said than done over, but yes, it is inevitable for moving forward MSMEs and understanding the challenges of MSMEs. This is going to help a lot in the time to come. Now, similarly, for the buyers of MSMEs, quite often it happens that the knowledge is not there, and MSMEs want to sell their produce. So at times their decision is wrong, not knowing the current status of the buyer. So here also, RBI has been asked that the credit rating details for all the buyers of MSMEs should be made available. How they are providing it, whether some other structure they have to bring out where all these details are there. So that is going to be quite helpful if that is done as early as possible. Now again, the encouraging stance is there that the expert committee says that there has to be service provider for this. So at say the tier 3, tier 4 places, the bank's presence is not to that extent. So the reach out to the MSMEs should be done through these service providers, and there should be some regulatory framework also, so that in a transparent way this moves. So these service providers can be the connect between banks and MSMEs. Even depending on the tie-ups, they can do the application completion aspect also, but the financing they will not be doing. The financing will be done by the banks only. So that way, the customer acquisition cost, which is high for the banks, for especially the micro enterprises, startups, that will be addressed. That is what the expert committee lookout is there. And RBI has initiated certain measures in this regard in listing certain players. It has brought about some shortlisting of some players who will be providing innovative solutions in this direction. With this, I will stop here. Later on, I will take up questions.
Thank you, Dr. Sinha. I think very useful inputs. Cash flow financing has become, very useful instrument for meeting the urgent requirements, as also, appropriate requirements, whether it is seasonal or it is short term or it is, for a longer term duration. It is easier for lender to assess the requirement, and it is easier for the borrower also to deal with the funding, in fact, that is available under the cash flow financing. I agree that unique identifier that you mentioned is prerequisite in this, as MSMEs have been basically now been registering under the Udyam Aadhaar. So that can play as a unique identifier, Udyam Aadhaar registration number. And if that is linked to the PAN, as you rightly mentioned, now PAN is, omnipresent now everywhere. All the financial transactions are supposed to be linked with PAN. And so availability of data, financial data of any enterprise or any individual will be very easy, in fact, for the lenders to decide as to what should be the quantum of cash flow financing or lending based on the past track record, on the basis of data available based on the PAN records. So we will keep, discussing on further issues on this. Meanwhile, let me bring in Ms. Ruchi Agarwal, who is the business head of RXIL, to discuss about the possibilities of meeting the credit gap through TReDS. RXIL is a TReDS platform, as I mentioned, and it is very, very important platform, in fact, for facilitating the discounting of invoices. So I have discussed briefly about what is TReDS platform in the beginning. I'll hand over to Ms. Ruchi Agarwal, who is a very senior person in RXIL, having, she's a regional head for North India at Receivable Exchange of India, and is a seasoned banker with over 14 years of experience in SME lending and treasury products for SMEs. She is an MBA from Institute of Rural Management, Anand, IRMA, Gujarat, and has tremendous experience with ICICI Bank, 13 years in various capacities, and she's also looking after the TReDS platform mandated by RBI in a joint venture. Yeah, TReDS, of course, is a joint venture of Small Industries Development Bank of India and National Stock Exchange, as I mentioned earlier. There are other co-sponsors also. So over to you, Ms. Agarwal. Please let us know as to how TReDS is, has already started working substantially to help the MSMEs, and how further the working of the TReDS can be improved, and how MSMEs can take advantage of this platform. Over to you, Ms. Ruchi Agarwal.
Yeah, good evening, everyone, and thank you, Mr. H.P. Kumar, for introducing TReDS and RXIL, and also sharing interesting insights on MSME financing, especially cash flow lending and revenue financing. And Mr. Sinha also, thanks for sharing your insights on revenue financing. So I think it has been already explained by Mr. Kumar, like what is TReDS, and how basically he has, mentioned that it is helping MSMEs in supply chain finance. So TReDS is basically Trade Receivable Electronic Discounting System. It's a platform which is regulated by RBI. So RBI issued directives on TReDS in the year 2015, under which SIDBI and NSE came together and they set up a TReDS platform with the name RXIL. So RXIL is also promoted by ICICI, SBI, and Yes Bank, apart from SIDBI and NSE. So TReDS, what is TReDS? TReDS is basically a platform. It is a digital platform which is connecting the buyer, MSME vendor, and the financier on a single platform. So here, when we are saying that MSME vendors can avail the financing on the TReDS, so here all the three entities, that is a buyer, where MSME is supplying to the goods and services, the buyer, the seller, and the financier should be registered. And as already discussed by Mr. As mentioned by Mr. Kumar, that it is a non-recourse facility which is available to MSME vendor. The platform is totally digital. And here, when I'm saying that there are 56 financiers right now there with our platform, so the rates or the bid rates which come on the portal, they are very, very fine, because the rates, there's a bidding and cross bidding which is happening on the portal, and it is a one-time registration for vendor which is there. So when I'm saying one-time registration, a same vendor which is supplying to, let's say, BHEL, and the same vendor might be supplying to NTPC or ISJEC, needs to register only one time. Similarly, a buyer which is registered can finance or can avail the financing under TReDS with multiple vendors. And if we talk in terms of benefits to MSMEs, yes, it is non-recourse financing available to MSMEs. Apart from that, they're getting lower cost of funds as there's a cross bidding, and the paperwork is very minimal. As we see that that if a MSME goes to a bank in order to get funding, they need to do a lot of paperwork, and they need to also provide collateral. Here, there's no need of providing collateral. And I mentioned earlier, it's a without recourse borrowing available to MSME. But when we talk of constraints, what constraints are there on TReDS portal? Here, the most important thing is that buyer to which the MSME vendor is supplying must be registered on the portal. Then secondly, the buyer must be at least BBB plus and above rated, because here the appraisal is happening on the buyer. So when we are saying financiers are financing the invoices, they are financing the invoices based on the credit rating or the credit worthiness of the buyer. So the buyer should be at least BBB plus and above rated. Only then the financiers are going to finance the invoices. As of now, it is there. But RBI has also proposed, the NBFCs should also come on the portal. So once NBFCs are on the portal, then we will see that even a lower rated buyer may be giving a higher rate of interest. So lower rated buyers can also be financed with the help of NBFCs. The third constraint is the buyer must accept the invoice on the portal. And so when we say that buyer must accept the invoice on the portal, so we have seen that there are a lot of PSUs, Maharatna, Navratna kind of PSUs are there, which are registered with us, because there's a government mandate that PSUs, as mentioned by Mr. Kumar also, that the PSUs and the corporates having turnover of above 500 crore must be registered. So they are registered for the compliance sake. But when it comes to actually accepting the invoices on the portal, so they are, so that is a mandatory condition. So if invoice is not accepted by the PSU, then that invoice cannot be financed on the portal. So that is, I feel this is one of the constraints. If we look at the snapshot on the rough numbers, in TReDS in last 5 years, we have done a funding of close to all the 3 TReDS portal put together. So right now there are 3 TReDS portal which have got a RBI, which are active and have got RBI license. We've done a financing of close to 1,10,000 crores. And on RXL, we have done a funding of more than 38,000 crore in last 5 years. And out of which hardly, I think 7 to 8% is related to PSU or state government funding. So state governments have also come on TReDS portal as a buyer. So the first government which is actually started transaction is the government of Goa. Second government to come is Tamil Nadu government. And there's a lot of interest which is being shown, because there's a lot of pressure on them by central government for the states. Even RBI is also pushing the state governments, and also Ministry of MSMEs pushing state governments to come and register as buyers on TReDS platform, because there's a lot of complaints by MSMEs that there's a lot of in fact there's one study which states that almost close to 10 lakh crores overdues are there, which is belonging to MSMEs. So there's a lot of push from the government. Apart from that, TReDS portal is also integrated with GEM portal. So GEM, I think everyone knows, it's a government e-marketplace. So whichever invoices belonging to MSME, wherever buyer and supplier both agree, they can take the financing from TReDS. So that is one. Secondly, we are also talking for integration with the GSTN portal, where the invoices which are there, which are tax invoices, can directly flow onto the TReDS portal if there's a consent, and those invoices can be financed. apart from that, RBI is taking a lot of interest. They are taking a lot of data from us regularly. Not only RBI, MC is also taking data from us regularly and checking with us, which like if any entity which is 500 crore and above turnover, are they registered on TReDS or they are not registered on TReDS? But they are right now checking only on the registration part. But actually transaction which is happening on TReDS or not, that is something they're just giving, kind of the directions, but that is not a compulsion as of now. So that is there. So I can briefly, maybe in the, we have a time constraint, can briefly take you the process of TReDS. So here, as I told you here, this is a post-shipment finance. So the financing is done only once the goods and services are supplied to the buyer.
Ruchiji, are you making a presentation? Because we can't see the presentation.
No, I can make the presentation, but that is going to take a lot of time.
Okay, okay. No, I was just checking whether maybe I thought maybe I am not able to see. No, please carry on. Yeah.
Okay. Because I think we have just 5-7 minutes left. So I'll just briefly explain in a very simple terms.
Yeah.
So one thing, we are just assuming that a buyer, the supplier and the financer, all the three parties are registered on the portal. When I'm saying registered means that you have to, contact someone on the portal and get all your KYC documents and agreements uploaded on the portal. The whole registration process is digital. MSMEs need not to travel anywhere or need not visit anywhere. Digitally, they can sign the documents and can get themselves registered. So once the vendor is registered, buyer is registered, and financier is registered. So after supplying goods and services, the vendor can decide to upload the invoices on the portal if they feel that they don't want to get the payment in, let's say, 45 days from the corporate. So we generally say 45 days, but if you talk to an MSME vendor, they get the payment even in 80 to 90 or 100 days also. So this is what we get to know from the market. So once the invoices are uploaded, they need to be accepted by the buyer official. After the buyer official accepts the invoice, it becomes a factoring unit. Once that invoice becomes a factoring unit, that is an accepted invoice, then the financier, whosoever wants to take a TReDS limit on that particular buyer. So when I'm saying a buyer could be, let's say it could be an NTPC or a BHL or could be a private corporate, and bank, let's say PNB or a Bank of Baroda, or let's say ICICI Bank decides to finance that particular invoice, they will start putting the rates. So these are called bid rates on that particular invoice. So let's say PNB would come and put a rate of 8%. ICICI would give a cross bid and put a rate of, let's say, 7.9. And then third bank, BOB, would come and they bid a rate of, let's say, 7.5%. Let's say vendor is bearing here, vendor is bearing the cost. The vendor would accept the lowest bid. Let's say 7.5% is the lowest bid. Vendor accepts it. So today, if vendor is accepting the bid, the next day, that is on T+1 basis, the vendor account would be credited. And let's say the tenure of the invoice is 45 days. So on the 45th day, the buyer's account is debited automatically by the financier. And as mentioned earlier, once the vendor gets the payment, it's a non-recourse financing. So once the vendor gets the payment, vendor is out of the picture. And on the due date, buyer is supposed to make the payment to the financier. That is basically, we take a NASH mandate, which is an auto debit mandate, by which the buyer's account is debited. And if buyer is failing to make the payment, then buyer's account will go for a SMA reporting to the RBI. So buyer ensures. So that is why here the financiers are only financing the higher rated corporates invoices on TReDS. So that is one. I think I've covered the process flow in brief. There's certain things like here in like a lot of private corporates are also deciding to bear the interest cost. So it can be, decided amongst the vendor and the buyer who wants to bear the interest cost. In some cases, they also even divide. That maybe 50% of the interest cost can be borne by the vendor and remaining 50% cost can be borne by the buyer, because here buyer is also getting an additional liquidity. And as mentioned by Mr. Kumar also, that it's an off-balance sheet financing. So for buyer, if he's having a limit of, let's say, 500 crore under their MPBF, which is basically assessed banking limits, which is assessed by banks. So this limit, which is called TREDS limit, can be taken apart from additional limits apart from their MTBF or bank assessed limits. So and secondly, this falls under priority sector lending for banks. So the rates of interest or the bid rates are generally better than the working capital rates, what generally a corporate gets. So for buyer, if he decides to bear the interest cost, for them also, it is an easy way of getting a finance, which is a unsecured way of getting a finance, which is a short-term finance, because here that maximum tenor allowed is 180 days. So for them also, they are also able to negotiate better with the MSME vendor in terms of getting better prices of the goods, because they're making payment on the, let's say, maybe a 5th day or a 4th day instead of making a payment on 45th day, or let's say more than that. So that is there. And I think I've mostly covered the points. So the product on TREDS, which we are doing, is a factoring product, which is one of the supply chain financing product. So I think I've covered most of the things. And if any one of the MSME vendors is keen on taking financing through TREDS, can actually reach out to our team, which is all the contact details are there on our website, rxil.in. You can visit on the contact us list, and all the phone numbers and email IDs are there. You can reach out to our team. You can understand the process of registration. You can check if your buyer is already registered with us. And you can even help us registering your buyer, because a lot of buyers or the large corporates are still not aware of TREDS, or they're aware, but still they feel they've not actually, sometimes they're so busy, they don't have time to get into additional products. So if an MSME is pushing the buyer, because a lot of MSMEs have helped us to actually activate large PSUs and large corporates, because they wanted the payments on time or before time. So they've insisted that they were able to influence the PSU to come on TREDS and release the funding for the MSME. So that is it from my side. If there's any query, I'm happy to take.
Yeah. No, thank you, Richiji. I think you have covered very well. In fact, I had one or two queries. So before I come to the audience, our distinguished participants to raise their queries, I would request that if you can share your contact details also, that will be helpful for them. In fact, they can contact, or otherwise they can go to RXIL website and see the procedure as to how do they log in and how do they take the benefit of this discounting. One thing I'm sure, that through this TREDS platform, RXIL platform, the cost of credit is substantially competitive. I think the bidding process that is the hallmark of this TREDS discounting.
Yes, rates are very, very good. In fact, corporates which were getting a rate of 9 to 10%, they are seeing a rate of 6 to 7% also.
Makes it simpler and easier for, it's very cost effective, and it's additional funding for both the parties. For MSME, it's off balance sheet, so they don't have to count in their borrowing because they've sold off the bills. So that's out of their balance sheet. They need not show as a short-term borrowing in their balance sheet. And for buyers also, it's an additional funding. The only thing I was going to ask Ms. Ruchi is that in case after 45 days or on the due date, the buyer doesn't have any limit available or any cash available, do you still feel that the taken in time and they will be obliged to pay? That problem is there. Ms. Ruchi Agrawal, are you there?
Yeah. So problem, so if you are saying the buyer is not able to, fulfill the obligation on time,
Yeah.
Am I
Is there a
audible?
possibility? Yeah, you are audible. Is there a possibility like this?
No, there is no possibility like that because it would be considered as a default
Okay.
and we go for RBI reporting. So there
Right.
is no possibility of, so that could be a reason that some buyers, they don't want to come on the portal
Right.
because if they're opted for a trades payment, then they have to make the payment on the due date.
Yeah. No, but that is, many of them are reluctant because they know that it is the complete due date that they have to make the payment. So I don't know how this is going to be sorted out, but then overall it is beneficial for the MSMEs. This basically platform has been made to benefit the MSMEs and MSMEs are benefiting. I'm going to ask another question, Ms. Ruchi. There was a talk of tweaking this platform system to finance on this directly the MSME vendors on the basis of their own strength. Is there a possibility? Because if large buyers are not coming, say MSMEs have sold the material to an ex-buyer and ex-buyer is not coming on the trades to register. So is there a possibility in future that trades will finance that MSME without their buyer being registered?
So yes, this is being discussed in various forums. So this is called Trades 2.0, that is Trade second window, wherein buyer is not registered or maybe buyer is not accepting the invoice. So in that case, it is basically being contemplated that in that case, the vendor's appraisal would be done.
Yeah.
And so the way we do vendor bill discounting, where vendor's appraisal is done, and maybe instead of funding the entire 100%, maybe 70 to 80% of the invoice funding is done. And based on the GST and invoice, wherein, GST and credit has been taken by the buyer. So that is being contemplated. Still, it will take a long way to go. And the other thing is that we have been discussing with the RBI and various forums that why not make this 500 crore to 250 crore mandatory for the buyers. So that is, I think that should come soon because MSME ministry has also noted this many times that even a 250 crore plus turnover entity plus should be registered as a buyer.
Right.
Yeah.
I agree with you. That is a very important requirement. So in cash flow financing, Dr. Sinha, would you like to add anything further? Any new addition which has been made recently, or it is the same cash flow financing which has been happening based on the past track record as well as future potential? And how are they getting the database now?
Yeah, Dr. Kumar, here there is one query in the chat box also, so I will cover that also.
Yeah, what is that query?
Yeah, it is a query that whether cash flow financing will have a collateral requirement, and also they are asking that it will be something, a new method which of working capital financing appraisal which the banks will adopt. Here I would like to put it that from 1997 onwards, RBI has left to the banks and their boards to have the kind of working capital appraisal methods and whichever appraisal methods they want to follow, whether it is operating cycle, whether it is turnover method, cash budget method, projected balance sheet method. Banks have been using all these methods as per their board's approval. And RBI does not come into picture for that purpose. Now here, especially the challenge has been there that there is still the fact which you highlighted that there is a big gap in the MSME requirement for credit and the MSMEs which are on the formal funding platform. So how to address this gap? And the understanding has been there that acquiring cost has been high. So that is why And also there are challenges with this MSMEs, micro enterprises in the bookkeeping aspect and proper record keeping aspect. So the intent here it is that having this unique identifier ID for each one of them, which will be tagged to various points, and from there the culling out of data will be there, which will be reliable for the banks, and it will be taking lesser time also in taking a decision for financing. Now, cash flow financing, obviously, the emphasis is not there on collaterals at all here. But cash flow financing, when it comes to infrastructure, big ones, it has been there, cash-based financing. Their collaterals looking to the large, big projects, all those issues are there. But for the smaller players, collateral certainly is not looked upon. And here, like the Mudra loans also, which is up to 10 lakhs, the collateral requirement is not there. Even this expert committee 2019, it has suggested to double the Mudra loan limits from 10 lakhs to 20 lakhs. So those collateral requirements certainly will not be there, because the focus is on availability of the inflow of the cash, and if it is adequately servicing the loan installments, that is good enough for the banks to take a decision. Again, it is banks to bank, and again, the banks call depending on the portfolio which they are having, how the quality of portfolio is there. So it will be differing. The stance will be differing from banks to banks, which I understand. But nonetheless, this is a potential area for tapping the business. Banks want to do business, so they have to be competitive in the market, and as per RBI initiatives and the expert committee guidelines, they have to have the kind of models which I said, that a loan service provider, which will be NBFC fintech company, and the banks will be financing. So reaching out to the customers, understanding their requirements, so that large coverage is there. And basically that will be on the cash flow financing method.
Right. No, I think you have given clarification on this. I think Zubair, you have, I think, many other questions also in the chat box. Can you read one by one so that we can attend to those questions? Zubair?
Yes, sir.
Am I
We
audible?
have a-
Dr.
yes, sir.
Sinha?
Yeah.
Please carry on.
So, Dr.
Yes, Zubair, please.
Kumar, Mr. Vivekanand is asking question: is there a centralized repository of finance invoices where the lenders can go and check to avoid double invoicing fraud?
See here, this relic which RBI started for 5 crores and above. So that sharing of information on the, say, SMA2, all those is done amongst the banks. It is on the centralized repository of RBI. But this buyers related, yes, that's one aspect. Like Madam Ruchi was telling that as far as this trades platform, so there, yeah, if a buyer accepts it, so that invoice, obviously the pulling out cannot be there by the seller.
Can I interrupt you, Dr. Sinha?
Yeah.
Yeah, I think Ruchi is handling handling this
Yeah, so
issue on platform, and the query is that if multiple financing can be avoided. Yeah, please tell.
so for multiple financing, we are using a blockchain technology.
Yes,
Basically, that ensures that a
yes, Miss Ruchi,
am I audible?
am I audible?
Yeah. Very much. Please go ahead. Yeah.
Yeah, so we are using a blockchain technology. So if a invoice is financed on one of the TREDS portal, it is not getting financed on the other portal. And before sending or accepting the invoice, generally it's a corporate's responsibility to check if that invoice is financed on other, under other program. So this is how basically first using blockchain, and secondly, if a corporate is accepting the invoice, because ultimately corporate has to make the payment to the banker. So whenever, in fact, we have done a lot of ERP integrations also, wherein there's always a check in the system which ensures that there's no double financing of the invoice.
Yeah. No, it's not. Yeah, please carry on. Please carry on.
Sir, Mr. Money is asking, how about working capital financing for MSMEs, which has completed OTS with PS Bank 5 months back, mainly BG limits? Our company has landed in cash flow problems due to huge delay of a project ordered by GOI, Government of India, and most of our customers are PSU.
Yeah. Am I audible, Zumair?
Yes, sir, you are audible.
No, in fact, their problem, I have read the problem, the remark that they have put in. This is a usual problem with many of the MSMEs, that their payments are getting delayed in spite of the fact that they have completed their projects. So his problem is also like this only. I would suggest that you put this issue along with details of your bills in the Samadhan portal of the Ministry of MSME, and also put details on the Champions website, Champions of the Ministry of MSME. Once you do this, they will take it up with the concerned department and the public sector so that the payment can be released. That is the way, because this is a usual problem which has been reported by a large number of MSMEs. It's basically delayed payment problems. So any other, Zumair?
Very
Sir,
correct, Dr.
this one-
Kumar.
Zumair, any other problem?
Yes, sir. This might be for Mr. Agarwal. Mr. Sanjay Jain is asking, is there a way platform to discount bills of unrated or lower rated buyers?
Ruchi ji can answer this.
No,
Ms.
so
Ruchi?
right now, as I told you, that banks are basically giving unsecured loans on TREDS portal. So they are not financing any triple B or below rated buyer. But yes, as I told you, that NBFCs have gotten in principle approval by RBI to that they can also get registered on TREDS. So we are seeing that we are projecting that in near future, even a low rated buyer, maybe they'll give a higher rate of interest in that case. So low rated buyers should get financed by NBFCs. Right now, it is not available.
Right. Zumair?
Dr. Kumar, Dr. Sinha shared a question that was given to him by one of the participants. The question was that many MSME manufacturing units supplies their product to government contractors who are working on various projects. How can we take TREDS to realize our payments?
Again, the point which Dr. Kumar said, that if the delay is there, normally in the government buyers, there are instances quite often of delay. Although after 45 days, interest claim can be there, they can go on the Samadhan portal for interest claim and getting the payment. But the hesitation remains on the MSMEs sellers that they have to do business and they do not want to spoil the relationship. But they have to take a call. This is the provision which is available by the MSME Ministry, by the Government of India through Samadhan portal.
Right, right. Any other question? Zubair?
No, Dr. Kumar, that is it.
So I think we come to the close of this program. It was a very, very interesting discussion. In fact, the two new instruments, one of course, the cash flow based financing and the other invoice discounting, both are very useful instrument for reaching out to a larger number of MSMEs in the country, particularly the small borrowers, micro enterprises, and those who have very small working capital requirement, seasonal requirement, and they cannot provide much of the securities. The TREDS financing is a very good initiative, and TREDS platform RXIL is of course very important part of this, is going to play a very important role. But I would suggest that, as Ms. Ruchi mentioned, that TREDS 2.0 also should be introduced as early as possible. I can assure you that we will take it up with the Reserve Bank of India. There is a meeting going to be held in the month of December itself, and that issue for introduction of 2.0, TRED 2.0, because that is the way forward. As somebody asked also, that how come without the rating or no rating of the buyers, when the buyers do not come, why should the seller suffer, vendor suffer? Because they are the MSMEs and they expect payments in time. So TREDS 2.0 is going to solve that problem, and hopefully TREDS 2.0 will be implemented shortly. So thank you very much. Thank you, Dr. Sinha. Thank you, Ruchi ji, for your very valuable contribution. And I also, thank Zubair, very nice of you, and the team Power to SME, who have put in this, program in place with a lot of efforts and very useful inputs. Thank you, Zubair. Thank you. Over to you.
Yeah, thank you very much.
Thank you, Dr.
Thank
Kumar.
you,
Thank you, Dr.
everyone.
Sinha. Thank you, Ms. Ruchi. And I thank all the participants who have joined today. And the recording of this session will be shared with all of you in a mail very shortly. So we will try to invite you again in our next webinar very soon. Till then, have a nice day.
Thank you. Thank you.